Okay, so well, we had you before lunch, but it was running a little bit late, so we decided, let's do this. So we'll just wake up people. So I first met Trevor in 2013, around the same time that I met Anthony DiOrio, who will be on later, co-founder of Ethereum. And you were in that early Toronto Ethereum, early Toronto Bitcoin meetups world. What was it like sort of when you first met that crowd, and did you have any idea that it was going to get so crazy so quickly?
Yeah, well, first of all, thanks for hosting. The venues are amazing, and the locations. You have mercy on us Northeastern North Americans to come at CoinAgenda, so thank you. But yeah, Ethereum, you know, it was really a Toronto story. That's where Vitalik's dad is from, and Vitalik. And Anthony, and I think Joe Lubin as well is from Toronto?
Originally, but then he moved to the Caribbean, but yes, he has Canadian roots.
Canadian, you know. So it was really a Canadian story, and we were at one point like the center of the crypto universe in Toronto. And a lot of credit, I don't know if he's in here yet, but goes to Anthony, who you mentioned, who really kind of was the resourceful person that put a lot of the right people in the right places together.
Put a big Bitcoin logo on Spadina and Young, I think, right?
Yeah, I thought it was like, I'm like, man, he's really invested in this thing, and he's like, yeah, and to his credit, he was bang on. But yeah, it was really interesting in the early days, because looking back, you know, there was guys like Gavin Wood who went on to Polkadot. Charles Hoskinson was a co-founder who went off to Cardano. And other guys we know like Amir and all those guys. And it was fun, and back then it was like really pure, because you know, we were all living in our parents' basement at the time, and everyone was just there for the right reasons, you know. You were the only bigwig back then, I think, with the market wire. But you know, so many stories. I know there's some books and stuff that have come out about the origins of Ethereum, but it was just a real privilege to be around during the origins of this game-changing technology.
So you went from sort of like, you know, investing in the early ecosystem and being able to profit from that. I mean, before that, you were a professional hockey player.
That's right. Yeah, in Canada, that's kind of our you know, you're at danger of getting deported if you don't play hockey. You know, so I wanted to stay in the country. And that was kind of my first chapter of my life and career, was just playing hockey. You know, school kind of took a back seat, and it was kind of my life mission in my teenage years, and it was kind of the pinnacle for my career, was getting drafted to New York in 2008. And people asked me why I stopped playing, and I joked that the coach called me in one day and said that I was just too good, and was making the other guys look bad. So it was, but leaving hockey was kind of a transition, because that's all I knew. And you know, I kind of started school late. I was kind of in my early 20s when I was starting, and kind of had to figure out what I wanted to do. And I was going down the path of kind of the Wall Street kind of banking, consulting, accounting path. And it just wasn't kind of exciting for me, I guess. I didn't really feel excited about doing the on-campus interviews and stuff like that. And I kind of made the decision to just transition out of that world into tech. And lucky enough, in 2011, I think, was when I first kind of discovered Bitcoin. Back then, that was the only thing. And I bought my first Bitcoin in 2012 on eBay. That was the only place you could really buy it back then. And next thing I knew, it was you know, going to the events. There was one in San Jose early on, and one in Miami, and just kind of falling down the rabbit hole. And I really connected with a lot of the early folks in the space, and decided this was going to be kind of the next chapter of my career.
Now, when did you put together those two interests of sort of the Wall Street that you thought would be a good career, but it was a little bit boring to you? And I mean, you were really one of the sort of forefathers of the security token. I mean, technically, Brock Pierce, who you know we'll be talking to him tomorrow, and he's you know, lives in Puerto Rico since 2017. You know, he created technically the first security token, which is the BCAP token. But you really were the first one to put together a whole infrastructure for how to go and do this on a large scale. tell us about the vision for Polymath. Disclosure was a advisor and early investor. Still have, I think, all of my Polymath tokens. And they're waiting for the next run-up. And it's now Polymesh, I guess.
Yep.
And tell me a little bit about the history of that, going through the Bahamas for your big conference, and then where you see sort of, it kind of got slowed down by the system, and where that leaves us today. Is Wall Street going to crush crypto forever, or is there a path to this being an inevitable happy marriage?
Show of hands, who's heard of Polymath, the big blue bull? Yes, that's cool. So we came out, it all started, the very early story. I don't tell this story much, but I was running a very small micro cap private equity fund. We were investing in online businesses that made high yield, high margin cash flow. And we had this whole portfolio. And I was kind of known as the guy in crypto. Anthony would actually make fun of me because I was always going to the events, and I was always like speaking sometimes, and I didn't have much to talk about. And I never really was doing anything because I was still in the old school world. And he would kind of give me a hard time about that, and I appreciate it because it kind of gave me the impetus to finally do something. So I actually went to Anthony one day. I actually remember the conversation in the summer 2017. And I said, Anthony, I got a new token, because he was kind of involved in some new altcoins early on as well, so he was kind of my early kind of advisor. And I said, I want to tokenize my fund, and it's going to be awesome. We're going to have cash flow. It's going to be the first coin that pays a dividend, blah, blah, blah. And he just immediately shut it down. He said, it's not going to work. People in Web, was it called Web3 back then? But people in crypto, in Bitcoin, they don't really care about that. That's the old way of thinking. Like, you got to think about protocols and tokenization, and there's a lot more impact you can make when it's decentralized, not just a security. And I said, okay. And I said, well, what would you do differently? And he said, well, what if you made a meta project that helped other people launch securities? So it could be like the layer on below it that people can launch on top of, and it can be a protocol that helps people legally launch financial securities. And that was, I said, yeah, you know what, thanks. That was a good pivot for us, and that was like the very beginning, moving into 2018, of Polymath, saying we see this massive, inefficient, kind of stagnant pool of private capital. Financial securities globally, including all public assets, are over $100 trillion. And they kind of live on this outdated back end, this kind of legacy infrastructure of like 1980s COBOL code. You have these weird like settlement engines that still take 2 or 3 days when you trade a stock. You have these like weird payments and wire transfer fees and things like this.
Depository trust, TTC.
Clearing, all this stuff. Yeah, it's ridiculous. If you look, I actually looked into kind of understanding the whole system, and it's just like 800 white paper pages of all these flow charts and everything of how the financial system works. And then with crypto, it's peer-to-peer. It's very simple, and it kind of
as I recall, a lot of the reasons why these things came about is when NASDAQ started out and started, automating the trading, so it wasn't guys with pieces of paper on the New York Stock Exchange floor. They started making it automated. They couldn't catch up with it, and so that's why they needed 2 or 3 days to do batch processing, and they inserted the DTCC, at least for Americans, to basically oversee it and kind of play funny games with it. And then I remember at your conference, I actually talked to. You had people there from both the Toronto Stock Exchange and the Canadian Stock Exchange, and I forget which one it was, and I said, when do you think it's going to be that this all goes through? And he goes, well, nobody I'm talking to in my world wants to get rid of T-3. They make money with with those 3 days. It's never going to happen.
Yeah, it's this weird combination of this kind of Frankenstein. No one has like first principle thinking of like, what would the financial system look like if we rebuilt it from scratch today? That's not how the current model thinks. They just keep adding and adding and adding complexity, like the tax code system. It just gets like crazy. And the other comment, like you said, is there's people who have an interest in the status quo. And there's rent seekers all across the board, from the service providers, the lawyers, the bankers, all the way down to the software providers. And that's what kind of excited me about blockchain. And we see it more manifesting now because tokenization has happened. It happened in different waves. The first wave was protocols. So tokenize a protocol. That was the first thing. It was called Bitcoin. And then the altcoins and Ethereum came, and tokenizing protocols became a real thing for open source software to have incentives behind it and bootstrapping liquidity and things like that. And so that was part one. Part two, I would argue, was cash. Brock as well started Tether, which was tokenized dollars. So tokenizing protocols, number one, tokenizing dollars, number two. The third thing I would argue is art. When CryptoKitties came out, tokenizing like art, that was a new concept. So now we're moving up the stack a little bit. And then now we're kind of moving into more tangible things, which is like real estate, commodities, stocks. And I think stocks will be the last one that get fully tokenized. But it's already kind of happening, and that's where Polymath kind of was inspired from, was like, how can we, especially private market capital, which is inefficient, which is illiquid, things like real estate, what if we put that all on the blockchain? What if all the liquidity pools could hook into each other on layer one protocols? And yeah, we were lucky to have like a great team and advisors like that.
And so let's talk about today. So it's been the shift to Polymesh. Where is sort of like the next big move of Polymesh having its functionality that actually fulfills your original vision, or has there been a pivot?
So we started out kind of like a EOS, another Brock project, that's the third one. Started out on Ethereum, and it was kind of the test net, and that's what we did with Polymath as well. We started out on Ethereum, and I love Ethereum. I'm very loyal to that network and community, but what I like about our project is we kind of evolved and we kind of learned a lot along the way. And the thing about Ethereum was it wasn't really designed for financial securities. When Vitalik was a little boy, he wasn't dreaming about making securities more legally compliant on chain. Like that's not how he designed it. And it showed up in our world when we were talking to banks and talking to issuers and saying, hey, why don't you use Polymath? And then they started doing due diligence on us. And we're on Ethereum. And then they're like, okay, well, what if we need to unwind a transaction because someone on the OFAC list, which is like Iran and Russia now, get a security? How do you unwind that? And it's like, well, you can't really do that because Ethereum is immutable. So end of discussion. That's like not going to happen. What about KYC? Is that native to Ethereum? No, it's actually pseudonymous, so that's not going to work either. And it went down and down the list, things like confidentiality, like more granular things. What happens if you're a hedge fund and your IP is trading and every trade you do shows up on Etherscan? That they're not going to use Polymath because we're on Ethereum and it's all completely open and public. So with all these learnings, we kind of said, you know what, first principles, what would a layer one security token blockchain look like if we were going to build it from scratch? And not only that, is that the reason security tokens haven't taken off yet, is because there's this huge gap between what the market wants and what's available out there. So we were a little naive at the time because, and we had an amazing CTO, Adam Dosa, who's still with us today. And we said, you know what, let's build kind of from scratch a layer one blockchain. And the beauty of it too was because we launched, we started researching this.
You brought in Charles Hoskinson.
Charles Hoskinson was our early advisor, and I give him a lot of credit because he, even away from some of his own tech, he guided us to a really good spot, and I respect him a lot for that. And we said, what would that look like? And so it was a 2-year project of R&D. We spent multi-8 figures on developing this blockchain. And my co-founder Chris is now leading it. We launched it earlier this year, and it's been a really awesome challenge because one of the hardest things you can do is build a layer one blockchain. When you're on Ethereum, all the tooling and infrastructure and development tools are already built, and it's already backwards compatible with everything else, with Etherscan, with Ledger, with everything. When you build a layer one, it's not so easy. You have to like bootstrap everything from scratch. And without getting too deep into the technical details, we chose Substrate, which was Gavin Wood's kind of framework for launching sovereign chains. And we chose that to help with our consensus and virtual machine that was already built in Rust through Parity. And so that's kind of our all-in bet. We're kind of deprecating our Ethereum token and going all in on our layer one security token. And I think the timing was really good. One, because blockchain technology modernized even since Ethereum launched. And you'll notice substrate is a lot more modular, so we can do things, we can have instant settlement, and that's another problem we had with Ethereum, and there's a lot of other things that we liked about kind of a more modern modular blockchain. And also, the market is catching up now, because if we were just swimming upstream trying to tokenize this little micro goat farm somewhere and brag about it, you know, that's not really exciting. So as time has went on, the market's matured, there's been more understanding from the capital markets in general. So that was kind of a good pause for us. The last 2 years, we kind of stopped with the marketing and the issuances stuff, and we said, let's build the infrastructure first. I've noticed I do some investing as well, and I'm an LP in some funds. 9 out of 10 smart dollars today is going in infrastructure. If you're investing in non-infrastructure, that's probably not a winning bet. I saw a slide like 85% of follow-on rounds are crypto infrastructure. So that's things like layer 2 scaling, things like cross-chain interoperability and privacy and things like that. So, so we kind of moved down the stack from being an app to help retail users who aren't even really here yet launch security tokens. Let's go down the stack and kind of, I use the analogy of a house. You know, you can't put the furniture in until you have the scaffolding, and you can't put the scaffolding in until you have the foundation. So a lot of crypto projects are kind of putting furniture in a house that doesn't have the foundation set yet. I think you'd agree with that too.
Absolutely.
And I'll also say, with some more kind of modern things that are happening today, like NFTs. So there's a lot of really interesting things around what is a security. So I'll use an example. There's an NFT collection a friend of mine started. And in the old days, you would sell your art in a primary sale for dollars. And you would say, here's $100, I'll take your art, and you'd sell your collection, and that would be it, and then you'd start drawing again. With NFTs, you can actually give away the art and then program in the smart contract a royalty. And this guy, who was like a starving artist basically, was making, I think, $100,000 a week in secondary sale, automated crypto royalties in the smart contract of the NFT. There's a lot of jargon in there, but the point is, with NFTs, it's programmable, so you can actually
Was this with CryptoPunks?
CryptoPunks didn't do a royalty. They would be worth like $100 billion if they did. But yeah, they could have done it, and new projects are doing it. But the reason I bring it up is because, well, what is that? That sounds like a revenue stream to me. And what if you package these NFTs together? That kind of becomes a security. And then what does that mean? Well, it can't trade on OpenSea anymore because these are index products. And now you need to register it, or you need to prevent unauthorized, unaccredited people from holding it. So just to tie in kind of what the polymath vision is to make these financial securities now that want to live, that want to breathe, that want to be regulated, but they just can't because you can't prevent unauthorized people from holding it.
And of course, it seems just nonsensical that you would have to go and be an accredited investor to go and buy a JPEG that has community features. I mean, that's just ridiculous. And I know the SEC is at least, you know, in talks to find out more information about Bored Apes, but it just seems ludicrous. But let's go back to really the traditional securities world. I mean, Apple Computer would love to be able to know who their shareholders are. They don't. They actually have to hire places like Georgeson to be able to say, oh, we think, because they're like several steps removed, right?
Unbelievable.
And so it makes a lot of sense. I mean, in my opinion, any technology that both sides of the transaction benefit from it, and the only reason it's not happening is because of current rent seekers and regulators who are like, you know, lobbied by them, has to go away. I mean, because it's not like Apple's fighting it, and it's not like buyers are fighting it. Apple Computer would love to be able to go and say, you know, I've got a new issuance now. I'm going to go and issue another, you know, $200 million of Apple tokens, securities, trading at the stock price. And, you know, you have to buy it through our resellers, our exchanges, New York Stock Exchange, yep, and whatever, but you can do it as a token. You can also do it the old way, but there, because they actually hold the information, they could go and say, we're going to have an airdrop of a $10 discount on the next iPhone to anybody that holds 1 share of stock. And if you own 100 shares of stock, you get 20% off in any iPhone store. That hybrid consumer investor model would just explode value, and it should happen.
Yeah, and just to add to that, it's because the token is a smart contract. Literally, the token is a smart contract. It's programmable. So like Michael was saying, all the paper, all the contracts, all the term sheets, like that, you go away, even the regulation, you can program the regulation directly into the token. And what that also allows you to do is global compliance. Right now, you guys are mostly American, I would assume. It's really hard to directly buy native Chinese stocks as an American, and vice versa. And the promise of blockchain is all these deep liquidity pools and the seamlessness of being able to do global transactions and commerce is within reach, because now you have the token that has all the cap table on it, it has all the restrictions of who can have it and who can't. And to your point, like it's amazing how much paper is still in the system. I still get, in some stocks I own, some DRS paper statements mailed to my house. And if I move, it goes to the wrong place, and then they forget to tell you. And that all is going to change. And with the latest...
But you could tokenize the regulations. You could say, hey, I'm an American who's interested in buying Chinese stocks, and maybe you have to show that you're a certain level of sophistication in China or in just, you know, accredited investor status or some other level, if it's public, that's lower than that, but like higher than like YOLO. And you know, these things will come up in a global marketplace, and there's no reason. I mean, in the old days, before the Jobs Act passed, there was this thing called blue sky laws, where if you wanted to go and sell stock, you literally had to go, unless you got an exemption, you had to go, like, you know, with a big JP Morgan offering or something, you literally had to go and go state by state to go and get approval to do like a private sale. And you know, after the Jobs Act passed, it's like, oh, no more blue sky. That went away.
And you know, maybe the last point, I know we're running a bit late, is with SBF running around, I don't see any outcome here, but they're going to try to turn everything into security, or they're going to, there's going to be this big war for jurisdiction between the CFTC and the SEC, and it's important for every project now to think about, you can't run away from it. I'm a libertarian, I'm as hardcore as everybody, but I've been in this space trying to do it outside of the way the world works. You need to have KYC, you need to have AML, you need to have registration, you need to have, this has to be de facto your default case. And I don't think all tokens are securities, I think that's crazy, but it's coming. And you can see, you know, the horses are circling for this industry, and there's not much we can do other than keep on lobbying and then prepare. And I would just encourage, you know, everyone, that's what we're trying to help popularize the technology to make crypto native registration and issuances and eventually secondary trading. That's the holy grail, to have security tokens, exchanges like T0 and these guys get accredited, get ATS licenses, go live, and then we have, you know, a real reason to exist. Right now, security tokens have struggled with that. But the convergence of, you know, what FBS is doing to expedite these draconian regulations that may be coming, and then all the exciting stuff on the positive side, the new enablement technology to enable more compliance and more global liquidity, I think is a perfect storm for security tokens to finally emerge in 2023. And I said that a few years in a row now, but I'm feeling, you know, we're closer than ever.
Thank you, Trevor.
Thanks, Mike.
Okay.